Welcome to the Bridge Capital special report coming to you a few minutes after the close of trading on Wednesday, December the 18th. Today was Fed Day. By all means, it's supposed to be a fairly straightforward event. Here from Chairman Powell delivers an update with respect to rate policy. High expectations going into this. Unfortunately, results for the market interpretation very different. A lot to talk about there. Before we get started, though, I want to share a few quick words from our legal team. With that, we can go ahead and unpack what actually happened. So first and foremost, as expected, the Fed delivered a 25 basis point rate cut. That brings the Fed funds to a range of 4.25 to 4.5. That was their third cut this year. Will certainly be their final one. And that represents a total of 100 basis points or 1% cuts to the interest rate policy. This has been referred to as a Hawkish 25. The hawkish nature of that refers to two components. First, the median estimates for interest rate cuts next year. That number was cut in half from another 100 basis points down to 50. Additionally, in the language afterwards, Powell mentioned they were not only on the fence about today's cut, but more importantly, they'll likely exercise some extra patience going forward when they think about those additional cuts. Now, interestingly enough, from the seat that I sit, the market had priced in a 97% probability of a 25 basis point rate cut. There was a lot of expectation among market participants for a more hawkish nature, again, anticipating that we would get that cut, but likely would mute expectation for future cuts going forward. That was very, very widely accepted. Despite that, though, we saw the market decline roughly 3%. That is certainly a huge move in a course of a regular trading day or period, never mind one over the course of the last 2 years where we have had very limited and muted volatility. Declines were led lower by some of the longer duration growth stocks as well. We think about the interest rate sensitivity for companies in that small and mid cap space. Those names were hit the hardest, in some cases down 4.5%. Again, not even in a single day of trading, really just in a 2-hour window. When you think about interest rates, so again, in expectation for those rates to now be higher for longer, that's a theme that we've talked about for a while. We saw rates move up in response to that language from Fed Chair Powell. The Bloomberg U.S. aggregate sold off just over 1%, had longer or bigger declines rather for some of those longer duration bonds, even in the credit space. Gold declined nearly 2%, while we saw Bitcoin shed just shy of 6%. Obviously, that is an asset class that has been putting up some remarkable gains for the last several months. Really the only safe place today in response to stronger interest rates and therefore, a stronger currency. We saw the U.S. dollar rally almost 1.25%. Again, that is all relative to other currencies. But across my screen for all the tickers that we follow, really, that was the only little bit of green out there. So no, that was a lot. Unfortunately, has been a very frustrating day here going into year end. We think about a lot of what Powell discussed had been well known. I don't think anything he mentioned really caught the market off guard. That being said, we'll see how we open tomorrow. Definitely somewhat a knee-jerk reaction in the last few hours of trading. That being said, certainly something that we have positioned for. Happy to talk through that in more detail. More importantly, if we don't connect, please have a very safe, very enjoyable holiday. I look forward to getting together in the new year. Take care.